When is the housing market going to crash? You can see for sale signs and open house signs everywhere. Earlier this year and the end of last year, so this is June of 2021, we're in the middle of June 2021. Last year around this time and earlier this year, a lot of people, a lot of experts out there were calling for a housing market crash by the end of 2021. So we're midway through that. So when is the housing market going to crash? Well, what they were hanging their hat on was the forbearance and the issues with people losing their jobs and not being able to pay rent, people entering forbearance programs. And so here's the thing. So most people are exiting forbearance. There's still probably a couple of million homeowners in forbearance, but those numbers are down. People are exiting the forbearance program. And out of the people that are exiting, only about 1% end up doing a short sale or a deed in lieu or something like that. Almost none of them are going into foreclosure because the housing market is still so hot that anybody who has the ability to sell is able to sell. And most of the properties that are exiting forbearance are either doing a loan modification, they are making up the balance that was owed because it was a strategic forbearance, or they are selling their house for a profit, for a net gain. So it's really interesting what's going on. So a lot of the moratoriums on evictions are expiring at the end of June from a federal standpoint, the CDC and FHA. Those moratoriums expire at the end of June. A lot of states are doing their own thing, but that's the federal FHA, Federal Housing Administration, and the CDC. And then you have the Freddie Mac and Fannie Mae, the two big government agencies or non-government agencies that guarantee and back most of the home loans and multifamily loans in the country. That program expires at the end of September in terms of moratoriums on evictions for rental for tenants, and then also there are restrictions for any multifamily owners evicting their tenants. So those all expire at the end of September. The unemployment benefit, unemployment bonus on the federal level expires. That's coming up as well. I believe that's September. Maybe it's at the end of the year. I can't remember, but that unemployment benefit, yeah, it's the end of September. I believe that expires. So we'll have to see what that does. But generally, that's basically keeping a lot of people from going back to work. It's summer. Why in the world would you want to go work a job indoors when it's a beautiful summer season coming on and you can get paid the same amount of money to go to the beach, go to the lake, and just kind of hang out and enjoy your summer? So people are having trouble finding employees in pretty much every business, every industry. It's getting tougher every day. But here's the thing. So everybody was saying that this forbearance of 2 million homes was going to lead to all these foreclosures, and we're going to have this huge wave of foreclosures between people that could not pay their mortgage and landlords who had tenants that were not paying their rent. And that's just not happening. We are seeing mortgage lenders and the banks working with borrowers. We're seeing landlords working with tenants. Now, there are going to be some foreclosures. There will be some evictions, things like that. But at the end of the day, very different than the last time we had a housing crisis back in 2008 and 2009. That crisis was brought on by subprime lending to unqualified borrowers, not just low income, but investor loans, exotic mortgage-backed securities, things like that. That's what created the banking crisis. A lot of those properties were overvalued. Now, one of the issues we have right now is the housing market bubble. The values of houses have gone through the roof because of artificially low interest rates, but borrowing standards are still high. And in fact, mortgage lending has been tightening up lately. It's getting more and more difficult to get a loan. You have to put more money down. You have to have a better credit score. So those things kind of remained intact this time. Even though the rates were low, you still had to have a good credit score. You still had to put money down. So we didn't see a subprime crisis like we saw last time, but we are going to see values drop when rates go up. That's what happens. The housing market has slowed down here in the last month, but it is June. We are coming out of the pandemic. A lot of places are opening back up. People are starting to travel again. So people are busy. They're out doing things. And the people that were thinking about relocating because their cities were shut down may not be looking to do that right now. as long as things are open back up and we get to the other side of the pandemic. So that's changing the way people live and the thoughts of moving. So we are seeing a decline right now in the overall activity, but inventory levels still remain at record low levels. Some of the home builders are pulling back on production because of the supply chain issues that we're facing, which are about to get worse again. I don't know if you've followed the news lately, but China is having, one of the large port areas in China is having another issue with the new COVID variant. So it's delaying shipments again, backing things up by about a month or two. So we are going to find some more supply chain issues until we get through the pandemic and we can get this thing under control and get it behind us. And with the rising cost of lumber, labor, materials, shipping delays, things like that, builders are kind of pulling back a little bit right now. They don't want to get caught with people not following through on the loans and buying the houses at the end of the day, and prices just going up exponentially and not being able to get out of it. So there's still a lot of stress out there in the housing market. There's low inventory. Buyers are getting tired of losing in these competitive bid situations, so they're getting frustrated and they're just leaving the market in a lot of cases. So that is dropping the demand a little bit. So we are seeing a little bit of slower activity, but a lot of times, depending on the area, that will happen in the summer. The housing market obviously is the strongest in the spring in most areas, and last year it was kind of all year just because everybody was leaving the cities. But with the cities opening back up, with things calming down a little bit, people are not exiting as fast as they were before. So it's going to be interesting to see how all these things change, especially with the Fed getting ready to meet, talking about easing the bond purchase program, raising interest rates, things like that. When the rates go up, house prices come down, so it'll be interesting to see how that affects people's mentality about their recent purchases of all-time highs when the equity starts disappearing in the house. You know, that's an interesting thing, and we'll see how people react to that and what the results ultimately are. But right now, as I have said all along, I do not see a housing market crash anytime soon. I do see values getting affected as soon as we have rising interest rates, but that's not necessarily going to lead to a crash in housing. I don't think people are going to just leave their homes just because they've lost value. I think a lot of people, especially that bought recently, are thinking more long term. You got to live somewhere, so you might as well, if you're not building, if you're not appreciating in value, at least you're paying it off. So at the end of the 10-year, 20-year cycle, whatever, you've built equity up by paying your loan down, unless housing just gets cut slam in half again, which it would take a big event, super high interest rates, a serious economic event to make that happen. And that's when you're going to see all asset bubbles deflate. So for the short term, I do not see any issues in the housing market. I do not see a crash. All of those things people were talking about just are not happening. And I said the same thing last year, and I said the same thing at the end of 2020, earlier this year and the end of 2020. It's just not mathematically possible. 2 million homes is not a lot of houses. If you put them all on the market right now, they would sell. There's that much pent-up demand and that much interest in housing right now, especially with interest rates still remaining at record lows. So that's my thoughts for today on the housing market, and I hope you're enjoying the summer, and I'll see you in the next video.